In this episode, I want to share 3 credit tips that will help you guarantee a home approval in 2026.
You would always want to be on the side of having good credit.
You think it pays to have good credit? Number 1, let's discuss these credit cards. Many of you guys who are watching or listening to this episode, you know you have those balances reporting to your credit cards. And if those balances are near your credit card's limit, well, that's going to plump your credit score. I see clients on a daily basis who sign up for Sturgis Credit Repair, and majority of the time, their credit cards are maxed out through the roof. And by their credit cards being 80% utilization, 90%, 100%, some people are over their credit card's limit as far as their balance goes, and they have a higher balance than what the card limit is. For example, I have clients right now with $1,000 credit card limits, but their balance is $1,100 just because interest. And a lot of times people get their card and they have like $5 left, for available credit. And they may go to a gas station and put $100 worth of gas in their vehicle, at the pump, because if you have $1 left available on a credit card, the gas pump will accept that and it charges you after. It doesn't just shut it off or click it off for that last dollar. So if you have a $1,000 credit card and your balance is $999, the gas station or the gas pump will let you run that pump up to $100. So next thing you know, your credit card balance is now $1,100 out of a $1,000 limit. So those of you who have those high balances on your credit cards, the higher your utilization is, the lower your credit score is. And I like to use utilization percentage as how many points that's affecting you by, because I've noticed people that have utilization that's at 100%, their credit scores are easily damaged by 100 points. If your utilization is at 50%, and if you pay that off, your credit scores can potentially increase 50 points. So, usually the points is a little bit higher, but, I just like to use that equal portion example there because it's almost accurate, just give or take. So the easiest thing for me to do is to compare the points to the utilization percentage. So again, number 1, the best thing for you to do is to pay off all your credit card balances, because a lot of times you hear people say, oh, keep your cards at 30%. That's what the bank want. No, that is wrong. The goal with the credit card is to pay it off in full, so you're not being charged interest on that credit card. Now, most banks understand life happens. You may have an emergency. So if you can't pay that balance off in full, they will allow you to charge up to 30% of your card's limit. If it's over 30%, they're going to think that you're going to rely on your credit card to make your bills or to live, right? They're going to think you're relying on credit cards to live this lifestyle if you can't pay it below 30%. So that's why banks say, hey, look, we understand life happens, an emergency happened. You may have had to use your credit card and you couldn't pay it off last month. Big deal or no big deal, but as long as it's under 30%, we're cool. If it's over 30%, you're kind of risky. So that's how banks look at it. So keeping your cards under 30% is not the goal. That's just acceptable by the banks. The goal is showing 0% utilization every month, because you pay it in full by the due date to avoid interest, and then you leave that balance at 0 until after the statement date of that card. That's when the banks will report to the credit bureaus. So credit cards, big deal. The next thing is negative accounts. If you have collection items, charge off, late payments, you need to work on those. Most lenders prefer you not to have anything negative within the last 24 months because that affects you the most. Now, I have a lot of lenders who are affiliates with Sturgis Credit Repair. We send them clients, they send us clients. Each one of them guys tell me something completely different. So I have one lender that I work with. He don't want to see any negative items within 24 months. I have another local lender or mortgage broker, and they say, hey, Chris, I can work with them if they don't have any negative items within 12 months. So, my whole idea with this is to at least try not to have anything within 2 years, because I feel like that's a little bit easier for you. Plus, regardless if it's 12 months or 24 months, Even things that's older than 24 months, if it's 3 years old or 4 years old, it can potentially still affect your credit score. So the goal is no negative accounts. But if you have anything within 12 to 24 months specifically, you need to work on those. You need to dispute those. You need to look at those items to see if there's any inaccurate information reporting, incomplete information. Even if nothing is wrong with it, dispute it anyway and see if they can verify. Just simply ask for it to be verified. If it can't be verified, the credit bureaus delete it. And again, even if it's verified, dispute it, or even if you think it's verified, dispute it, because the Fair Credit Reporting Act states if there's no response within 30 days from the creditor, if the bureaus get no response from the creditor, they would delete that item from your credit report. So there's so many options you can go as far as challenging or disputing, and you may be lucky enough to where one of those items are deleted from your credit report, like this client here, 3 items deleted within the last 30 days here. But just simply disputing those items, challenging them. If something looks unfamiliar, challenge it. If something looks wrong on the account, challenge it. You may come out lucky. So again, negative accounts. Now that's as far as charge-offs and collections and things like that. But further speaking on collection accounts, you can actually submit a pay for deletion agreement with a debt collector. So if you see a debt collection company is reporting a debt to your credit report, you can call them and negotiate with them and just say, hey, look, if I pay this, will you guys be willing to delete, not update the balance, but delete this item from my credit report? If they say yes, try and get something in writing, because most debt collectors will lie, but just see if they can promise to have this item deleted. If they do, then go for it. If they say, hey, we can't delete it, we don't have any control of this, even if you pay it, it's still going to report, but we can update the balance. That may not work for you, and disputing it may be a better option for you. So check that out as well. And then with late payments, there's things called a goodwill adjustment, or a goodwill letter, or a goodwill request, whatever you want to call it. You can reach out to your creditor, mailing preferred, or preferably you can mail a letter to your creditor, explain why you was late, explain what you learned, explain the steps that you're taking to make sure that you're never late on this account again, and they may be willing to give this as a one-time offer here and reverse that late payment. That is called a goodwill request. We have seen that happen several times. Now, for you folks who are watching and listening who have 30 million late payments on your credit, especially for one specific account, you're not going to get that goodwill request granted to you, because they're going to just be like, no, look, this is too much. And now I'm just speaking on people that may have 1, maybe 2 late payments on an account, just all combined there. So, if you have more than 2 late payments, don't do that. Don't waste your time with it. Last but not least, debt to income ratio. If you are in a bunch of debt, you have credit cards, you have personal loans, you have all these other loans and whatever the case is, card notes and things like that. If you're living paycheck to paycheck right now because you're in too much debt, you should not be looking at a $500,000 investment or $500,000 purchase trying to get approved for a home. You need to either sell some stuff or you need to pay off some stuff. You need to be under 40% debt to income when it comes to buying a home. That is including the mortgage payment on whatever home you're attempting to buy. So if you make $10,000 a month before taxes, banks will only approve you up to 40% of your income, including the mortgage payment. So if you have $3,000 a month worth of debt right now, you only have $1,000 you can spare on a mortgage payment. What mortgage are you getting in today's world that's $1,000 a month? Probably, nowhere, right? So most of your mortgage payments in America today is about $2,000 per month, just give or take. Yeah, you're gonna find $1,600 here and there, $1,700, $2,100, $2,500, just on average for your basic starter home. It's probably gonna be anywhere between $1,600 and $2,000. Let's just use $2,000. So if your household income, you and your wife, you and your husband, you and your significant other, or just you, if you make, let's just say 80, 100 grand a year, or let's just say 120 and just use $10,000 a month. You have a $10,000 a month salary, right? Or income, and you have a $500 car note or a truck note or a car payment. Well, your debt to income right now is super low. But let's just say you have $2,000 more in loans and credit card payments and things like that. You need to start paying some of that off before you get pre-qualified, because your DTI would be way too high, right? Now, if you have zero debt and you make $10,000 a month, well, you can probably qualify for a mortgage that's $4,000 a month, because your total debt to income will be 40% or less. So debt to income, that is by far the main considering factor when it comes to getting approved for a mortgage after the credit requirement thing has passed. Credit reporting, or your credit scores and your credit reports, is actually just a small piece of the pie. That's just your initial yes, you're pre-qualified, or no, you're not pre-qualified answer. Once you're past that, everything else is going to rely on your debt to income ratio. So DTI is very important. If you follow those 3 tips, make sure all of those things are looking clear or looking good and giving you the green light, you're good to go to get pre-qualified. Thanks for tuning in to this episode. If you wish to be a guest on our podcast, visit SturgisCreditRepair.com and click the podcast page to schedule an episode. If you need help with your credit, you can also sign up at SturgisCreditRepair.com and start your free trial today.
Sturgis Credit Repair. Sturgis Credit Repair. If you want a new house, call us. If you need a new car.